Welcome to 𝐄𝐓𝐇𝐄𝐑𝐄𝐔. We talk about investing, finance, and professional development. As the current time of 10:03 a.m. on Eastern Time on Thursday, October 13. Hope you guys have a good week so far, and happy Thursday. We're almost to Friday and to the weekend, obviously. And apologies for not posting in the last 48 hours so far. I've been going to several different conferences, one in Greenwich, Connecticut, one at the Harvard Club of New York City, and one that happened yesterday is the Robinhood JP Morgan Investor Conference, which I was invited by one of the board members. So it's been just a long day of talking, and if you look at my business cards, I did collect quite a lot, which is, I guess I have to do some follow-up later. But with respect to the overall market, obviously today is the monumental release of the CPI report. And I don't really have to explain it to you guys, but just looking at the CNBC news that we're seeing this morning, you can see across the market we are down about, on Dow Jones 1%, S&P 1.31%, Nasdaq 2%, and Russell's also down 2%, while VIX is leveling off for some reason, which is interesting. And if you take a look at the high level, it seems like inflationary pressure has increased by 0.4% in September, more than expected despite the rate hikes. So it seems like the 75 basis point that we have had so far is not working, right? And we can take a look at it closer. And with respect to the 10-year Treasury yield, it's also jumped back to above 4% after the CPI top expectations. So with respect to the CPI report, on a high-level synopsis, you could see that clearly consumer price index rose by 0.4% in September and went up 8.2% from a year ago, according to BLS data released on Thursday. If you exclude food and energy costs, the core CPI accelerated 0.6% and 6.6% respectively. The yearly gain for core was the highest since August 1982. Seems like we keep making new record high on the inflationary front. The workers' wages, which is one of the key mandates that the Fed has, it seems like it took a hit, has fallen by 0.1% monthly and 3% year over year when adjusted for inflation. So now with respect to the obviously October has no FOMC meeting, so now the market is obviously expecting another quadruple 75 basis point rate hikes in November and December. So it is definitely gut wrenching, and it seems like what Jerome Powell is doing is definitely disappointing a lot of people in the market, including myself. It doesn't seem to be anything tactical around it. And I was at a conference yesterday. I also able to speak with a lot of hedge fund managers like Paul Tudor Jones, people from Elliott Management, Citadel, Ken Griffin himself. And I learned a lot about their perspective on the inflationary pressure, and obviously, and also Ben Bernanke was there too. Was obviously the former Fed. It seems like the collective wisdom and the outlook from everyone. It seems like recession's definitely imminent. Despite what Joe Biden said yesterday, that yes, we are, we might get in a little bit, but we won't be like very submerged. But JP Morgan did release recently from Jamie Dimon himself that 6 to 9 months out from here, we should expect to see a little bit more pain. So ideally, seeing sometime, around Q1, Q2 next year should see some revival, right? And take a look at also with respect to the overall big whales activities. If you take a look at this real quick, this is BlackRock. Seems like they sold quite a bit yesterday. Yesterday, but they did also buy some. But if you take a look at the amount, is it like sizable? I would say so. Seems like they probably made a bad move. They probably sold a lot because of the anticipated pressure. But I don't know how they're acting today because it's happening today at the moment right now. But we should expect to see a lot of selling tomorrow. But ARK Invest on the other side of the equation, did sell a lot, but they also bought some amount to kind of normalize it. But they across the spectrum is quite non-changed. So it seems like they're acting differently. But on the overall market, let's take a look at it, shall we, with respect to recording time of 10:08 a.m. on Eastern Time. it seems like we are doing something that we have been expecting to need to do, which is forming a death cross for Ethereum, right? We are waiting for it. You can see that we got down to 1194. And the reason is because 1150 is also a bounce that we have had, but a real level is 1050, to be honest with you. And with respect to the cross section, we still need to kind of cross down a little bit. So the depletion that we're seeing in front of us, down 5%, despite it's down 5%, is not sufficient, right? And also on the weekly, you could see that we are about to form a death cross as well. So seeing lower level for Ethereum, knowing the fact that we still have some elongation until the next month of the CPI report and the FOMC meeting. So ideally, as we shift towards the weekend, we might see a little bit buying pressure on the Friday, but Monday and next week we are going to see some earnings, so hopefully the corporate outlook's going to be fine. But my gut feeling is that they won't be fine because of the continuous rate hike. So it seems like we're just sliding off the cliff slowly and slowly and slowly, like the way that how JP Morgan and some other hedge fund managers are depicting going into a recessionary environment. With respect to monthly, obviously it's quite depleted. We're looking for some separation. So it's eventually going to glide out and take off from here. And then on Bitcoin side of the equation, I would say it's quite comparable. Large separation on a monthly, so months out should be rebounding. But on a weekly, it is still clearly quite bearish. You can see we need to kind of cross down before we cross up. And at the same time, we're not overly sold. We're not completely oversold, but we still have some room to kind of come down to. But this is just relatively speaking now. Like seeing like 17,500 again is very possible. On the daily right now, you can see that we've clearly formed a death cross. So now we are bouncing at the 35 out of 70. But if we break it, we can ideally go down further to 30 out of 70. Okay. All right. Let's take a look at maybe some altcoins out of the equation. They are all getting killed as well because obviously they get lower price treatment. So people typically would be more likely to buy these or sell these. So it's more volatility coming. But across the spectrum, the technical is quite comparable to how Ethereum or Bitcoin are trading because obviously they are the key driver. And also on the index front, you could see that with respect to the overall market, monthly is quite dragged out. Weekly, obviously we're forming this death cross formation, but it is looking to kind of land soon. But I think we still have some room to come down to because we are not meeting with the previous support level of 32 out of 70. We're 35 right now. So still have a little bit of room to come down. And respect to daily, it is also looking for some level off down to a 29 out of 70 mark. So it's not terrible. So we will see some sell off, but not significantly. And look at Tesla, you can see that we're getting killed. We broke the support level that we've had before. Which first level was 224, second level was obviously 213, and now we are 208, 206 basically. But we are really submerged, so buying around these levels is very logical. It does look like we're quite a land right now. We are very submerged at 23 out of 70. On a daily, you can see that we also form a death cross, which was very logical. We are basically meeting with the prior resistance level. But on the monthly, we should ideally see some rebound from here. But it looks like the inertia is quite stale at the moment right now. And I would say this is applicable across multiple other stocks. They all have like very similar affectation. You see Coinbase is getting completely killed right now. On the weekly is on the monthly the RSI is very overstretched, and on the weekly you could see that it's forming a huge separation, so it needs to go down further, unfortunately, despite being down 10% at the moment. And daily you could see that we're about to form a death cross, so it looks quite bearish across the spectrum. All right, appreciate you for your patience, and I have to get going. I have to get to the city soon. But appreciate you for hopping on a call with me today, and I'll check you on the next one. Take care. Bye.